What if the college fund you're pouring thousands into, instead of securing your child's financial future, is actually destroying it? You got to watch this episode now. Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. This show is for you. You've worked so hard for that money, and you're now ready for that money to start working harder for you today. You want to become work optional, where you work because you want to, not because you have to, because you have enough passive income coming in to cover all of your family's needs, all of your expenses, and then some. But on top of that, guys, you're not just doing it to get rich and to just quit your job or just to live fat and happy. You're doing it because you know that as you're blessed with more money, more resources, more ability, you can create greater blessings in the lives of others. And that is a ripple effect that you can create. And that is a ripple effect I'm so excited to be able to create through you today. So thank you for tuning in, binging, and sharing on these episodes, because I could not do it without you, especially now we've gone on over 11 years doing this show. And this has been all because of you. This movement, this is what we're doing here. And you could be a Rippler too. And by the way, if you want to be one of the 1,000 people, we want to be financially independent who are work optional by the year 2030, check out our website, moneyripples.com. There's a passive income calculator that might give you more hope to be able to do it faster now. Okay, so we talked about the college savings that many people have been dumping money into, 529 plans, things like that, saving for their college future. But what if the 529 plan could actually be hurting your child's future or even creating more risk than it's worth? That's what I want to talk about today. This is actually at a request of my team. I can't remember which team member it was now, but they had posted, a guy. Of course, on if you're going on Instagram, TikTok, and everything else, there's all these kind of people that are financial geniuses, experts, whatever you want to call them. But half the time they just don't know what the heck they're talking about. So let's talk about that. Okay. Sorry, I'm trying to keep it G-rated for you kids. But let's talk about this. I want to show you exactly what this thing was, because I thought it was pretty interesting. Now, this is not too dissimilar from what you see out there today, right? It says simple hack to set up your kid for life. Invest $1,000 in a 529 plan when they're born. Add $100 a month until they turn 18. By 18, they'll have around $75,000 saved. Now, if they don't need it for college, roll into a Roth IRA, let it grow, and by age 50, it could be worth $2.6 million, all tax-free. I'll ignore the "are you interested in this post," right? So that's what the guy shared on as his post here. By the way, look, there's already, at this point, it was from 2 days ago, over 4,000 likes or loves, lots of different comments, lots of shares. So obviously this Milan Singh, who I personally don't know, but obviously he's saying this is awesome. Even if you're a kid, you can save it up until they go to college when they're born. And then eventually, even if they don't use it for college, use it as a Roth IRA. And then by 50, they'll have all this tax-free money. But here's the thing. Let's go into that a little bit. Let's talk about that, because there's a few issues I have with this that really just don't add up, right? Okay, so let's go into these numbers a little bit. Let's see what he's talking about. All right. He's talking about putting in $1,000 when they're born, then adding $100 a month. He's saying you should have about, pretty much you have about 75,000 when they're 18 years old. So I ran that. I tried to figure out where the math was. The closest I get is if it was around 11.5% return for 18 years, putting 100 a month after putting in 1,000, you'll have almost $75,000. So I thought, okay, maybe that's the case, right? Few issues here. One, are you going to get 11.5%? Because the truth is, and you guys have seen me do plenty of videos on this, and I'll probably do some more about what's the real return of the S&P 500. And for the last 30 years, it's been about 8.4% while we're at a market high, right? Coming from a kind of a little recession in the mid 90s to a market high now, and still with the bottom and to the top. Remember, like, it depends on where the bottom is. The bottom's higher, it's different. But if it's lower, it looks better, right? Especially if the top is higher too. And so when you have that kind of situation, you think, okay, cool, 11.5%. All right, I'll go with that. Now, the thing is, of course, is, all right, let's just say that's the case. Awesome. But what's the buying power of it? Now, inflation, that's another debate, and I'll do another topic just on inflation here in the coming weeks. But even if I said 4%, which by the way, 4% is it's so much more than that, guys. If you go off of real inflation, when I do that video, you'll know why. But inflation's we all know it. If it were only 4%, that would mean your costs would only double on average about every, using the rule of 72, right? About every 18 years. So almost every 20 years, your prices double. Guys, it's more than doubled in the last 18 to 20 years. Remember, 18 years ago was about just 2007, right? Come on, house prices are way more than that. We've seen food costs go up way more than that. The only thing that hasn't gone up more than that is probably gas prices, right? But just about everything else has gone up a lot more than that. And so when we talk about this kind of thing, it's like, okay, cool, that's great. Well, if it's at 4%, right? And that's, again, I think that's low. That means your buying power is about 36, almost $37,000. With school today, is that going to do much? Sure, it'll help. It's good. But yeah, you'll have about 75,000 if, again, the market does better. But what if the market doesn't? What if you get maybe 8%, right? So I'll put it to 8%. Look, you now have one third less. Instead of almost 75,000, now you have $50,000. And with after that inflation, if it's, and again, that conservative inflation, 25,000. Remember, it cuts in half every 18 years, right? So if you get 8%, you're getting less. It's just not as much. Again, I'm not saying you shouldn't save. I'm just saying, this sounds great and all because it'd be awesome, right? But is it? Now let's take this number. I'm going to take the same number here. I'm going to put that as the initial investment where we're at today. Now you've stopped paying in $100 a month. Remember, he said if you go to age 50, now you're going to have $2.4 million. Let's see if that really works out. I'll keep his same 11.5%. Now 18 to 50 is another 32 years. Okay, cool. 2.4. Actually, I think he said, if I got to look at it again here, he actually said it's, was it 2.4? Is that what I came up with based on this? Oh, he actually said 2.6. So he's telling you should have 200,000 more than what I'm even calculating here on this, right? So again, the math is a little bit iffy, right? But still, same thing, right? What if I change this, from that to that 50,000, I think it was 800, right? And again, you only make 8%. Okay, cool. Well, now we're at way less. Now instead of 2.6, you're thinking you have more like 600,000 instead of 2,600,000. You have 2 million less. Buying power now, it's about $170,000. And you might just say, again, Chris, that's not bad. I mean, for some of you just threw in $1,000 and then put in $100 a month, which is 1,200 a year for 18 years. That's not bad. And you're totally right. I mean, again, you're putting in roughly like over $20,000 to then come out with, even after that conservative inflation, maybe more. Now, of course, it could be less, but we're just going with it, right? So I'm not saying that savings is not good, but there's a few problems again. Remember, he said at age 50, you'll have this money in a Roth IRA you can pull out tax free. Well, inflation is a big one, right? If I just change this 1%, by the way, just from this point, for the 32 years, your 169 becomes 125, and I didn't even do that for the first 18 years of your life. So remember, inflation can be a big, big number. Interest rate, the actual interest you earn, can be a big, big difference. And then the next thing is, of course, talking about the Roth IRA. So if you do it when your kid's born today, like we just had a team member that just had a new baby boy born, right? And that baby boy, obviously in 50 years, imagine that 50 years from now is the year 2075. Who's to say there's even going to be a Roth IRA? Now, there might be. But what if there isn't? And who's to say they're not going to change the rules in the meantime, right? So think about that. The rules can change at any point, and you just have to go with it. What if it's, well, obviously, even today's rules, you can't even access at age 50. You try to pull it out, you're going to be penalized, right? Now, you can pull out the money you put in, but remember, he only put in roughly about, 20 some odd thousand dollars, 20 some odd thousand, right? Well, if they're supposed to have 2.6 million and you're trying to pull out retirement, remember, 20 some odd thousand in 50 years won't be worth much, right? It won't be worth much at all. Okay, so the total contribution you put in is 22,600 over those 18 years. In 50 years, if inflation is only 4%, that means you have a buying power of about $3,100. At 5%, it goes down to less than $2,000. So it's less than a tenth of what it is today. Imagine that. So yeah, but you can access the Roth. You can take out the principal, without a penalty, but any of the growth, there's a penalty. So guess what? You had all this growth from the 529 that you then roll into a Roth IRA. Everything is up for penalty. So no, you got to wait another 10 years. And maybe that'll help you get more money in it because hopefully in 10 years, it'll grow a little bit more. Maybe it'll go up from 600,000, maybe up to like 1.25 million. Maybe it'll double in 10 years or something like that. Can't guarantee it, but maybe it will, right? Cool. Well, then again, you got 10 more years of inflation too. So it means it's worth even less. And so you're thinking, oh, this can be amazing. But once again, it's money that you lock up in prison that you keep away. And the biggest reason why you're trying to save right now for your children is because you want them to have a brighter future. Well, this guy's talking about having a bright future. You don't even know if your kid will be alive then. You don't know if the world will even be the same. If you've been following this podcast, you're probably looking for great ways to create passive income right now, right? Well, we got you covered here with Central Lending. Central Lending specializes in alternative investments that actually are designed to create steady returns and long-term financial security for you and your family. Now, they prioritize transparency. They love, building those strong relationships, giving you that confidence and peace of mind, knowing that you have your money working harder for you, so you don't have to work so hard for that money. You want to learn more how to do that? Go to centrallending.com and check out what they've got today to create your passive income and wealth creation right now. That 529 plan, again, all those rules, you don't use it for college. What happens? They slap you with a penalty, right? If you had tax breaks with it, you lose the tax breaks. Not all states do, right? But again, you have all these situations where you're like, oh, I can use it for college. It'll be great. It'll grow tax free. Well, not if you don't use it for college. What if your kid gets a full ride scholarship or a grant and they don't need the money? What if your kid chooses not to go to college? What if things change because college becomes such a ripoff? Like we're already starting to see lately, more and more people saying maybe I should do more vocational trades because I'll get paid more with spending less. Maybe I should just more do it a kind of an apprentice type model or something like that. Maybe they're going to start their own business instead because they have more hope doing that than they would investing a crap load of money into student loans or whatever else, or hoping they don't have student loans by doing this 529 plan. But again, what if it all doesn't work? What if the market tanks? This is another problem we saw like in 2022. People that went to college 2022 said, oh, great. I just had all this money. I saved up, maybe if you're lucky, saved up 4 years of college expense. And then of course, 2022 knocks away one of those years. So then you're left with 3 years of college that you've saved for instead of the fourth year because it was wiped out by market losses. That can happen because again, you don't really have control of that money. So think about it. 529 plan, in my opinion, is one of the worst places, the worst prisons you can lock up your money for your children's future because there's really no wiggle room. There's no ability for the world to change with it, right? Because that money's got to be used for college. And yeah, you might say, well, I can maybe use it for primary education. Like, if you're, some private schools. But how many of us have kids in private schools? Not that many. I know some of you do, but most of the people don't. They're putting their kids in public school or they're homeschooling. And again, it comes right back to what if they don't use it? What if they, it might work, but it might not. And of course, even if it does work, what if they do go to college, but of course the market returns drop at that last moment? Now what are you doing? Now you got to find ways to find out how to pay for their education. Or maybe they do have to take out student loans after all, and you didn't want that in the first place. You see where I'm going with this? That's a big, big risk. Where, guys, I could do the same thing instead of locking away in a 529 plan and then, of course, trying to roll into a Roth to then hopefully down the road have access to it someday if I'm lucky. And of course, that money's not really being put to use. Stewards like to have control of their money to be able to use it in the here and now, to grow it here and now, not just set it and forget it. Another myth I'm going to be talking about in the coming weeks. And so you want to be able to have control of your money so that you can maneuver as the world changes and shifts, you can change with it. This is why I personally use my life insurance policy. I know you hear this, especially the last few weeks. I guess I've kind of brought up whole life insurance or using this, max ROI infinite banking strategy or creating this freedom fund for your family. I've brought this up several times the last few weeks because the truth is that when people are looking for a good solid place where you have almost like the Swiss Army knife of uses, right? Where you can use it for so many different things. I'm much more flexible using my life insurance than you are with your 529 plan. This is why I don't have 529 plans for my kids because I just don't trust. One, I don't trust the market. Two, I don't trust the government that they're out looking out for my best interest. And three, I think I don't trust that I know the future. I can't, even with my kids, most of them are now teenagers. I don't know which ones, even some of them are a few years away. Some of them are still debating about whether they want to do college because now they're saying, well, there might be some better options outside of it. And it's true. There might be. I even had another, child recently that she ended up getting enough Pell Grant, different grants and things like that and scholarships that she didn't even need it. Right. So it came right back to the same point is that I want to have flexibility because if that child all of a sudden doesn't need that money, cool. Maybe I can help them with something else in life. Maybe it could be that first down payment for their home. Maybe it can help them get a start in life when they get married. Ideally, when they get into their mid to late 20s, they're probably a little bit better with money by that point, hopefully. Not all kids are the same. I've learned that as well with 8 children. And then, of course, what if they want to use it to start a business? Maybe that's one of the best things. Maybe you could become a actual business partner with them using that money to invest in it. And yes, with life insurance, you could put it in the name of the kid, but you have full control. You own the policy, not them. They turn 18, it's still yours. Unlike certain types of savings accounts or whatnot that you could use through a bank. But then, of course, they turn 18, they can run right in that day on their birthday, strip all that money out of there, and even without your permission, right? So again, I have control of my money. I have the ability to predict it. And the nice thing with life insurance is that any tax rules, which it is gross tax free, comes out tax free, like a Roth, but I don't have to wait till I'm 59 and a half to get to it. The great thing is that I have the freedom and flexibility that if anything happens with the government changing rules or laws, guess what? I'm grandfathered in the tax laws at the time I got it. So I've got it at the time where, I'm not only protected from lawsuits and creditors, but it's gross tax free, comes out tax free. And the government, even if they decide to change the tax rules down the road, which by the way, for over 100 years, they haven't, because they know that life insurance is one of the best ways to keep the government from losing money. Because it's when people don't have life insurance, that's when people start tapping in. They start tapping into Social Security and things more and welfare and things like that. The truth is that the government wants to promote you to be self-reliant, which is why that keeps coming back to that tax-free status, right? And yes, you can create this tax-free savings account that's paying 6% or more a year right now, and it's doing great. So my whole focus wasn't on just trying to talk about using life insurance. I just wanted to tell you that's the option I use. I choose to use. Heck, you could choose to use a savings account if you want. I don't care, right? The truth is like I believe that the 529 plan is not as cool as what so many people lead you to believe. And what I'm finding is this: is many of you keep reaching out to us and saying, "I hate my 529 plan." Or you know what? I thought it would be better. It's not even doing well. They're like, by the way, Chris, it's not even doing up to par for the market. Like it's doing worse performance than the stock market. Like, and I really have no choice in the matter because it's based on the kid's age, where they invested. So I have zero control. I just hope and pray that's going to work out. So more and more people are really becoming disgusted by their 529 plans and coming to us again to do things like infinite banking, right? To use that freedom fund instead. And it gives them more flexibility to use it for other things than just college and or worrying about, well, just postpone it till retirement because they didn't need it for college after all. Guys, they can spin it however they want. The truth is a 529 plan is a trap. It's a trap, right? It's a, thanks, Akbar. It really is a trap. It's something that we got to watch out for. So, again, if you have questions, go to moneyripples.com, right? But I'm going to start hitting more of these myths because there's so many of them and people will teach them all over the place. And remember this, when it comes to myths, just because so many people teach it doesn't make it true. Just because 3 billion people might believe it's true doesn't make it any more true. This is why so many people are trapped financially. You need to break free. That's the ripple effect I'm here to create for you so you can not just have money freedom, but it creates time freedom. It creates options in your life so that you truly are free. Remember, cash flow creates freedom because cash flow is what creates options. Go and make it a wonderful and prosperous week. See you later.